traders across the world rush to close bets ahead of Fed decision. Investors should close short positions on bonds and stocks. BNP Paribas has more than doubled cash holdings ahead of the Fed. Some investors have a message for anyone looking to bet big before one of the most pivotal Federal Reserve policy meetings of the year. Don't or risk getting burned. Quote, close shorts on equities and bonds, said Stephen Miller, a 4-decade market veteran and investment consultant at GSFM, a unit of Canada's CI Financial Corporation in Sydney. Quote, I'd be closing long dollar positions too. The next 24 hours are so uncertain when the market has already worked itself into such a pessimistic lather into the meeting. Miller's caution is mirrored across trading desks from Worry Bank in Seoul to BNP Paribas Asset Management in Hong Kong as investors brace for another jumbo rate hike from a Federal Reserve bent on cooling surging price pressures. Markets are pricing in a 75 basis point increase with a chance of a full percentage point increase, a risk that would only compound recession fears. The Fed's decision comes during an action-packed week on the policy front, with the Bank of Japan and the Bank of England both scheduled to discuss rates on Thursday. The reviews may fuel big gyrations in global markets as traders try to get a handle on where borrowing costs are headed after the recent outsized hikes by the Ritzbank and the Bank of Canada. Nervousness is flashing across virtually every asset class. Expected swings in U.S. stocks are near levels last seen in mid-July, while those on treasuries have jumped to a one-month high. Overnight implied volatility has also surged across all major currency pairs, underscoring uncertainty over how foreign exchange markets will react to the Fed's decision. Hoarding cash. And it isn't just the size of the rate hike that's in focus. The key message for investors will probably be more on the Fed's projections for where the policy rate might peak. In the wake of all this uncertainty, BNP's head of Asian and global emerging market equities in Hong Kong is hoarding cash to protect his portfolio. And goes on to say what they're exactly trying to do. But what this article is saying is that the markets are so pessimistic right now that it's not going to take a lot of bullishness, a lot of, our worst case scenarios coming to life to get a bullish reaction in the markets. Now, we're going to read these last two paragraphs and then talk about this a little bit more, and then go over some of the data for today on the S&P, on AMC stock, on all of these things that you need to know. So it says, quote, we're not doing anything different on 75 or 100 or even 25 basis points, said Jacobinson. Quote, we need to balance over time is which part of the economies need capital, and that's not going to be based on a single event risk like the FOMC. In contrast, macro funds have been building up short positions in U.S. equities since the latest American inflation print, according to an analyst by Nomura Holdings Inc. For Worry Bank's Min Jiang Wang, taking any strong position into the meeting, existing or new, may lead to losses. His advice, sit out and parse the Fed's messaging before taking any bold action. Don't try anything before the meeting, said Min, an economist in Seoul. Sleep early, wake up early, and review the speech of Chairman Powell, and go fetch your cup of morning coffee. Now, I think that is actually wonderful advice, and I think this is something that a lot of people are really overshadowing. It doesn't matter if we get a 75 or 100 basis point rate hike. Yes, the markets might freak out for a second over a 100 basis point rate hike, but in the grand scope of things, that would be a bullish thing in the markets, because that would take the federal funds rate to 3.5%. Most Fed speakers have been saying they want to get rates and hold rates at 3.5% to 4%. So if we get a 1% rate hike, and then we get another 50 basis point rate hike, or two 25 basis point rate hikes, boom, the tightening in theory should be over. Now, this Fed meeting is a little bit different because we don't always get a dot plot, a summary of economic projection. So on one hand, we're going to get the dot plot where Fed members expect the federal funds rate to go. So if a lot of Fed speakers are still in that 3.5% to 4% range, well, that's going to be bullish because, hey, we're almost to that already. So that would mean a Fed pivot in some form or another, because they would stop raising rates. They would at least take a pause, and that would be seen as a very bullish thing. And when that happens, you definitely don't want to be short on the stock market. Now, at the same time, we're also going to get projections for the unemployment rate and for the GDP rate throughout the rest of this year. Now, why that's important is because the Fed has made it very clear that as long as unemployment is healthy and not going through the roof, the Fed can continue to raise rates. So in a weird way, the faster the unemployment rate goes up, the faster we are going to get a Fed pivot. Now, if the Fed comes out and they say, hey, we're expecting to see 0.5% higher unemployment rate by the end of the year or by the first start of 2023, well, the markets might look at that and say, hey, that's possibly when the Fed might pivot. So there's a lot of things going for us right now that could turn this event into a very bullish market-wide reaction. Now, also, you guys got to keep in mind that while there is a lot more potential bullish things going for us heading into this FOMC meeting, the fact that the stock market is down over 3% just over the last, week or two of trading heading into this, that is in and of itself a bullish thing. But if the Fed comes out and they try to change things up, if they try to say, hey, we're probably going to keep raising throughout 2023, well, that's something the markets don't expect, and that's something that would be negative. If the Fed starts to say, maybe we're going to have to get the federal funds rate up closer to the level of inflation, say 6, 7, 8%, well, that would be something the markets don't like, and that would cause a rapid recalibration in the bond market, and that would cause a mass sell-off in the stock market. Now, I think it's pretty clear that that's probably not going to happen. The Fed really, I'm sure you guys have heard this, they really can't afford to jack rates up that high. They can't afford to pay those borrowing costs, at least, for a mid to long-term outlook. They could afford it in a short-term sense, but at that point, you're probably going to push us into a very deep recession. So I don't think that is the game plan, and that would really be the one thing I could see right now, which would be very negative. Think about it. Negative GDP, you're talking about a technical recession. Well, the markets rallied off of that last time because that means the Fed will U-turn. That means inflation will come down. So inflation coming down, that's obviously very bullish. The GDP contracting and going negative, that is bullish in terms of the Fed slowing down raising rates. Unemployment going up is bullish. From my perspective, it looks like all of those things are likely to happen, and the dot plot, the summary of economic projections, is likely to show that as well. So I think when you boil this down, it's looking more bullish than not. And if we go and look at the S&P 500, the option activity for the day, you can see 74% of this option activity so far is positive, or 94%. Did I say 74%? 94% is positive order value. So that is very bullish in and of itself heading into this FOMC meeting. Now, if you look at the short interest, yesterday it was at 19%, but over the past 7 days, still currently, the short interest is up on the S&P 500 about 5.3%. So you have seen a lot of shorts taking on those short positions heading into the Fed, and that's probably not the best move to do, considering all of the factors that we have talked about. So if you have a lot of people on the wrong side of this trade, essentially a lot of people that are bearish when the markets react bullishly, well, a lot of people are going to flood to close out of those short positions, and that could give us a big rally to the upside. Now let's go ahead and switch gears, talk about AMC stock here briefly before we go ahead and wrap up this video, because I want to get you guys this information as soon as humanly possible. You can see a positive order value of 64% so far for the day. 6 orders totaling $270,000 $2,000. So looking pretty bullish right here and right now as well. You did see an October 21st $10 call that did come through, about $1.50 out the money, so it's decently far out the money on a percentage basis. Now, for the short interest, the shorting activity, cost to borrow max at 18.33%, cost to borrow average at 16.82%, and cost to borrow minimum at 15.41%. You do have about $865 million worth of short positions on AMC stock and a short interest that is sitting at 19.28%. Free flow out on loan 35.76%. The days to cover at 4.15, and cost to borrow, it says right here, at 17.6% and 100% share utilization. So when you put this all together, guys, it looks like stocks, in my opinion, stocks like AMC, DraftKings, Affirm, SoFi, Snapchat, you know, these stocks that are higher growth stocks, higher risk to reward stocks, are probably going to fare pretty well since they have been victims of a lot of this shorting activity over the last couple of days heading into this Fed meeting. So there is that. On another note, it does say mortgage demand rises for the first time in 6 weeks despite sharply higher interest rates, which could be seen as a positive thing nonetheless. But you do have a little bit more geopolitical tensions that are coming out of Russia today that has the world a little bit more on edge than we were. So it says Putin mobilizes 300,000 troops for war in Ukraine and warns he's not bluffing with the nuclear threat. Key points: President Vladimir Putin has ordered the partial mobilization of the Russian population, including calling military reservists into active service and a boost to weapons production. In a pre-recorded announcement, Putin said the West wants to destroy our country. He claimed that the West has tried to turn Ukrainian people into cannon fodder in comments translated by Reuters. So a lot of people are even trying to leave Russia. The plane tickets out of Russia are like 10 times more expensive than they were just a couple of days ago, and I was actually freaking out when I seen this, because why are they charging that much? People really don't want to be a part of Putin's facade. It says the cost of flights departing Moscow skyrocketed after President Vladimir Putin announced partial military mobilization in a televised address on Wednesday. Flight prices are 9 times more expensive than they typically would be in some cases, according to Google's tracked prices feature. And after Ukrainians' counter-offensive that has really turned the tide of this war, which I thought was coming inevitably anyways, I think Ukraine will win. Now, that is not getting political here. That's just down to strategic, military and the will to fight that Ukraine has. Well, this is turning into a little bit more of a dangerous situation when you're talking about nuclear weapons or using some form of a tactical nuke. That would be something that the markets know about, but are not really expecting. That would be like a gray swan, and if that were to happen, given what we might do with our military, how we might retaliate to that, the stock market would not like that whatsoever, and I think that would be something that would give us one of those days where we actually get halted, right? Where the whole index gets halted. You would probably see a 7 to 10% drop on that day a nuclear weapon was used. So it's something to keep in mind. It's not something that I would hold my hat to, but if Putin really starts to lose in a big way, and we're not seeing support for, people to go join Russia's military out of nowhere, well, that's something I would be on the lookout for. There's really no way to make a trade on it. You would either get lucky with your trade if that happened or not. Hopefully, it does not happen, but something well worthy of putting in this video. So that's pretty much going to be it. S&P 500 up about 0.67% heading into the Fed meeting. Probably a lot of people closing some of those short positions. Looks like a good bet to make as of right now, considering the S&P 500 is at 386.70. I mean, you've still fallen a lot just over the past couple of days. If we draw a trend line from this level around the 410 mark down to where we're currently at, I mean, you're down about 6% just over the last 7 trading days or so. So in all regards here, you know, you've seen a lot of the pain already, and you're going to need to see a lot of new information to get a really negative market reaction. And even from those peaks that we just seen around 430, the S&P 500 is down 10% heading into this FOMC meeting. So I do think it will be bullish, but watch for that fake out, guys, because sometimes some FOMC meetings, you'll get a very strong reaction into the close. You might see a 2 to 3% positive day by the end of the day today, and then tomorrow you sell all of that off plus some. You have a 3 to 4.5% negative day tomorrow. That is very possible as well. That's why you'll want to stay tuned to the channel for new information and what Fed Jerome Powell does say, because I'll keep you guys updated, and really, you know, it's going to be important what is actually said, not necessarily how the markets just react, you know, in the moment to what is said. So hopefully that made some sense. Hopefully you guys have a little bit more clarity what to expect heading into this Fed meeting. If you do, if you like the video, hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time, link down below in the description. As well as that, get your free stocks with Webull, Moomoo, and Public for free $99 down below in the description. I don't know about you guys, but I love free money, so sign me up. And if you guys have not already, that is your way to do that. So thank you guys for watching. I will see you in the next one.